Question number 3. A product passes through 3 processes A, B and C. The details of expenses incurred on the 3 processes were as under, and the units introduced and sundry materials எல்லாமே கொடுத்திருக்காங்க. Apart from that, management expenses during the year were 90,000. Management expenses 80,000 rupees. Selling expenses being 50. These are not allocable to the processes. Actual output of the 3 processes was A 9,300. Actual output 9,300 for A, 5,400 for B, 2,100 for C. And 2/3 of the output of process A and 1/2 of the output of process B was passed on to the next process. Okay. So from A to B, whatever the output we realized from A, 2/3 is transferred. And from B, half is transferred. Balance is immediately sold. So sold, that will be transferred to the costing P&L account. The entire output of process C was also sold. C la irukradhu elladhum sell பண்ணிட்டாங்க. The normal loss of the 3 processes calculated on the output this way. Normal loss நான் இங்கே நோட் பண்ணிக்கிறேன் சும்மா. 5% in case of A and 15% in case of B and 20% in case of C. And that will be saleable at rupees 2 and 5 and 10. Prepare the 3 process accounts and then profit and loss account. Is that okay? Here management and selling expenses are non-allocable. பிரிக்க முடியாதுன்னா that will be transferable to the common costing P&L account. Clear? So in this illustration we have to understand the preparation of the costing P&L account also. So management and selling expenses. Okay. Now, costing P&L account. In costing P&L account, common expenses, management expenses 80,000, selling expenses 50, non-allocable expenses. This is over. இப்போ இந்த விஷயத்தை நம்ம ரெக்கார்ட் பண்ணிட்டே வர போறோம். So we are going to record these things one after one. Process A. In process A, units, rupees per unit and total rupees. Units, rupees per unit as well as total rupees. Units introduced being 10,000 here, input, and the price being 100 per unit, the overall value being 10 lakhs. Apart from that, the other materials, sundry materials, labor, direct expenses also introduced. Sundry materials are other materials 10, labor 30, direct expenses 6,000. And then the normal loss in this process being 5% in that input. How much is that? 500. Saleable at what rate? 2. Then the scrap value realized here being 1,000. The output being 9,300. Out of the 9,300, 2/3 is transferred to the next process. Transferred to process B. 9,300 output 2/3, 6,200 is transferred to the next process, and 1/3 is immediately sold off. The items sold off will be transferable to the costing P&L account, which is 3,100. Okay, the 3,100 units sold, no, is immediately transferred here from process A. 3,100 units, I don't know value. I don't know value. But this is a saleable process A. 3,100 at what value? The finished goods of process A is saleable at 120 there itself. Further process இல்லாமல் இந்த இடத்துல விற்கணும்னா எனக்கு 120 க்கு விற்கலாம். Then the value being 3,100 into 120. So the sale value being 3,72,000 rupees. I need to know what is the cost. Cost கண்டுபிடிச்சோம்னா அது போட்டோம்னா ஆட்டோமேட்டிக் கண்டுபிடிச்சிடலாம். This is one approach. One of the approaches is what? Find out the cost, and at that cost it is transferred to the costing P&L account where it is going to be sold. The other approach is இங்கே 3,100 into 120 போட்டு சேல் பண்ணிடுங்க. காஸ்ட்டுக்கும் இதுக்குள்ள டிஃபரன்ஸ் நெட் ப்ராஃபிட் ஃப்ரம் ப்ராசஸ் ஏன்னு கூட போட்டுக்கலாம். You can identify the process profit in process A itself. That ultimate profit can be transferred up to the costing P&L account. There will not be any harm in this. Right. While closing, you have to first tally what? You have to tally the units. If I tally the units, do I get abnormal loss or gain? Hope I get abnormal loss only. 10,000, abnormal loss being 200 units, isn't it? 200 units being the abnormal loss. You know that finished goods or abnormal loss or abnormal gain will have the unit price being the same. இப்போ அந்த லாஜிக்கில் இப்போ நம்ம போட்டோம்னா என்னாச்சு? We have to find out the normal cost per unit. Normal cost per unit is equal to normal total cost divided by normal output will be taken. Okay. Normal total cost வந்து add பண்ணிங்கன்னா 10,46,000 in the debit side, where the amount recovered on selling the scrap being 1,000, அதை subtract பண்ணிட்டீங்கன்னா numerator value being 10,45,000 divided by output being 10,000 minus 500 போச்சுன்னா 9,500. If I divide 10,45,000 divided by 9,500, the cost per unit at this stage being how much? 110. See, 110 மதிப்புல இருந்து நம்ம என்ன ரேட் விக்கிறோம்னா 120 க்கு சேல் பண்றோம். அப்ப 3,100 யூனிட்ஸ்க்கு into 10 rupees gain 31,000 gain. அந்த 31,000 gain வந்து process A ல நீங்க ஐடென்டிஃபை பண்ணிக்கலாம். பட் நான் என்ன பண்ணியிருக்கிறேன், எல்லாத்தையும் காஸ்டிங் P&L க்கு ட்ரான்ஸ்ஃபர் பண்ணி அங்க ஒர்க் அவுட் பண்ணிடுறேன். Where the consolidated profit and loss could be identified in costing P&L account, there will not be any harm in this. Now, this value being 110 and here also 110, here also 110. 200 into 110, 22,000. 6,200 into 110, this value being 6,82,000. 6,82,000. And here 3,100 into 110, the value being 3,41,000. I think it is tally. And the cost நான் இங்கே multiply பண்ணியிருக்கிறேன். 3,100 units உடைய value 3,41,000 but sold for 3,72,000. அப்ப ரெண்டுக்குள்ள டிஃபரன்ஸ் வந்து profit due to operating process A, the output of process A immediately sold. Because of that we gain 32,000 rupees. நம்ம understand பண்ணிக்கலாம். Now let me transfer that to the next process, process B. Process B. In process B, the units processed in A transferred. So transferred from process A, 6,200. Though we processed 9,300, 1/3 is immediately sold off. Balance 2/3 only transferred to the next process here at the same cost being 110. Overall total being 6,82,000. Clear? Now, apart from that, the other expenses are these three items. Sundry materials, otherwise simply put this being the material or other material, 15,000. And labor being 80,000. Other expenses, direct expenses. Do you have any product? Okay, direct expenses being 6,000. Do you have any other overheads? No, I think so. We don't have any other overheads, right? That's all, right? The management expenses and selling expenses are non-allocable. Sometimes it may be allocable அப்படின்னு சொல்லி கொடுத்திருந்தாங்கன்னா அதை allocate பண்ணி போட்டிருக்கணும். அது மாதிரி இல்லை இந்த கொஸ்டின்ல பொறுத்த வரைக்கும். Then output here being 5400. What is the normal loss here? The normal loss here being 18150. Okay, thank you. Direct expenses being 18150. Yeah. Now, the normal loss in process B being 15%. அப்போ 6200 normal loss எவ்வளோ வருது? 930. And the normal loss in process B can be saleable at rupees 5 per unit. Then the ultimate value you get here being 4650. Very good. Now the output being 5400, though the output is 5400, only half of which is transferred to the next process, another half is immediately sold. So process C க்கு transfer பண்ண வேண்டியது, another one will be transferable to the costing P&L account. Out of 5400, half we being 2700, 2700. And here process B இருந்து transfer பண்ணப்பட்ட ஐட்டத்தை நான் இங்கே போட்டுக்கிறேன் costing P&L accountல. 2700 units, I don't know the cost currently. We have to calculate it later. And by the same time, process B உடைய unit selling price வந்து 165 if it is processed at process B level without further processing சொன்னால், that unit can be saleable at what price? 165. So if you multiply this with 165, how much? 4,45,500. 4,45,500 will be the revenue. Yeah, it's now your duty to find out the cost. Cost கண்டுபிடிக்கும் போது, is there any abnormal loss or gain check பண்ணோம்னா என்ன வருது இதுல? Of course, you have to first tally the units column. 6,330. I think 130 units you get excess, right? That 130 will be called as abnormal gain. Now you have to find out the cost here. The cost கண்டுபிடிக்கும் போது என்ன வருது? The same way, total cost minus 4,650. The total cost here being 7,95,000, 7,95,150 minus the amount realized on selling the scrap being 4,650. Denominator normal output being 6,200 minus normal loss 930. The ultimate value here being 150. So that 150 will be commonly applicable for all the three. Means abnormal loss also, abnormal gain also valued at 150 per unit. Goods are transferred to the next process also valued at the same rate, and sold to the third party will also be valued at the same rate. So 2,700 into 150, if you multiply these two, what's the value you are getting here? 4,05,000. So this is also 4,05,000, and the amount transferable to the costing P&L also being the same 4,05,000, and abnormal gain value being 19,500. Very good. So 19,500. Now total the process B, it is 8,14,650. 14,650. 8,14,650. Now the units are supposed to be transferable to the costing P&L account. I am transferring here. Process B ode cost either 4,05,000. So 4,05,000 is the cost, but it is sold for 4,45,500. Then the difference between these two is the profit due to sale of the item in process B directly without further process. Let's now move on to the last process, process C. Process C, the same way, and the units completed in process B supposed to be transferable here. Process B landu vandadu 2,700 units were valued at 150 in the previous process, so 4,05,000 should be here. Apart from that, you have to add up the other costs. Sundry materials, the value being 5,000, sundry materials 5,000, and labor 65,000, and then direct expenses 27,200. Is that clear? Normal loss in process C being 20 percentage on the input and it is saleable at rupees 10. 2700 at 20 percentage 540, saleable at rupees 10 per unit, then overall collection here being 5400. The output what we get in C is only 2100. This output is no more is processed further, so immediately transfer over to the costing P&L account for the sale. 2100. Now you tally the units column first of all. If I tally the units column, again I get loss only here. 2700, 2700, abnormal loss we have. The abnormal loss here we get being 60. Am I right? Abnormal loss. Now you can find out the normal cost for the product we have manufactured in process C. And this unit is saleable at rupees 250 finally. The selling price per unit here being 250. So process C we get 2100 units. This unit is saleable at rupees 250. Then the amount collected on selling the units processed in C being 5 lakhs 25,000. So 5 lakhs 25,000. Okay. So I don't want this anymore. So I'm going to now calculate what? Cost, normal cost for the processed unit at the last process C. இதில் total of the debit side value எவ்வளோ இருக்குங்க 5 lakhs. Okay, 5 lakhs 2200. 5 lakhs 2200. From 5 lakhs 2200, you have to subtract scrap value realized 5400, which is the normal cost. 2700 being the input where the normal output we expected being after subtracting 540. Normal cost by normal output will be the normal cost per unit. The normal cost per unit being 230. This 230 will be applicable for the abnormal loss as well as costing amount its goods transferred over to the costing P&L account. 60 into 230, the value of abnormal loss being 13800, and then the value of the finished goods transferred over to the costing P&L account being 2100 into 230 is equal to 4,83,000. So with that, the process C is also over. This will be now transferable to the costing P&L account. So process C, 2100 units. The cost at that level or final level being 4,83,000. Of course, the 4,83,000 rupees worth the goods sold for 5,25,000. Then the difference between these two, okay, almost 42,000 I think so, is the gain in the last process. So you can now identify the gain in each and every processes also. அது மாதிரி ஒவ்வொரு ப்ராசஸ்லையும் கெயின் கண்டுபிடிச்சு அதை கூட காஸ்டிங் P&L அக்கௌண்ட்ல கிரெடிட் சைடில் போடலாம் அல்டிமேட்டா. அப்பார்ட் ஃப்ரம் தட், before you close the costing P&L account, it's your duty to prepare normal loss, abnormal gain account, and if there is any difference, then it will be transferred to the costing P&L account. Right. Now, so abnormal gain account, abnormal loss account first. Abnormal loss account எது இதில் வருது? We get the abnormal loss in process A. So process A இருந்து வந்த abnormal loss 200 units, the value being 22,000. Abnormal loss வந்தால் cash can be saleable at what rate? Normal loss உடைய rate விக்கலாம். The normal loss can be saleable in process A being at 2. So if we multiply with the 2, so 400 rupees is recovered. Apart from that, we get the abnormal loss again in process C, where 60 units were lost, process C. Then the value being 13,800. Any abnormal loss may be considered as a normal scrap and can be saleable at that rate. So 60 can be saleable at what rate? Here being 10 rupees. So at 10 rupees you can finish up selling. So 600 you will be considered as your amount recovered. Beyond that, whatever the amount you have, you know, that is the ultimate abnormal loss transferable to the costing P&L account. 22,000 and 13,800, 35,800. Okay, 35,800, and 1,000 is subtracted. The ultimate loss being 34,800 transferable to costing P&L account. Costing P&L account. So in costing P&L account, abnormal loss. Abnormal loss. 34,800. The next we will go for abnormal gain account. We will prepare the abnormal gain account. Abnormal gain. We face the abnormal gain situation only in which process? Process C. As the abnormal gain is in the debit side, it should be posted here in the credit side, process B. The value being 19,500 for 130 units of abnormal gain. As there is abnormal gain, to that extent of normal loss could have been reduced, so you have to subtract from the normal loss at the same rate. Okay, normal loss. 130, that value here being 5 rupees. You have to subtract 5 rupees. So 5 into 130 being 650 is subtracted. Balance is the abnormal gain transferable to the costing P&L account. Costing P&L account. 19,500. 18,850 will be the amount transferable to the costing P&L account. I transfer here. Abnormal gain. Abnormal gain. 18,850. And finally, the last one, normal loss account. Normal loss account. We have the normal loss in all the three scenarios. In very first process, P1, PA, process A, 500 units, 1,000 rupees loss. PB, 930 units, 4,650. PC, 540 units, 5,400. And where we won't recover to the extent of abnormal gain, amount rupees 650 should be subtracted. So it's posted here. Abnormal gain, 130 units. For that 650 we won't realize. If you tally, then the ultimate value is nothing but cash. Amount realized. Isn't it? Normal loss tally பண்ணிட்டு அதோட டிஃபரன்ஸ் நீங்க பட்டுக்கு P&L அக்கவுண்ட்ல லாஸ்னு போட்ற கூடாது. What's the value? Come on. 10,000, 11,050, cash being 10,400. Now you can finish up tallying the costing P&L account to identify the profit for all the three processes put together as a whole. I think there's a loss. 13 lakhs, 93,800 is the total of the debit side. We get lesser credit. It means these processes leads to loss only, loss situation. The net loss here being 32,450. 32,450. Is that clear? In all the three scenarios we gained. In all the three scenarios. But ultimately in the glass on the corner, the common unallocable expenses and management expenses, selling expenses corner, and a huge abnormal loss also one of the reasons. Is that okay? So this illustration will give the comprehensive idea about the process costing. Clear? So with that the basic model is over. The next model is with stock, right?